Someone commented and said, every time I do a stop loss and it hits, I lose money, and then the stock goes back up.
You want me to comment on that?
Yeah. Because you were recommending, this is on a video of you recommending stop losses.
Yes, but you can't look at it, that's just, I would call it like a microcosm of something that happens to one person, right? You can't say it's a rule that every time you put a stop loss, you lose money. If you look, let me take a step back. A stop loss minimizes your losses. It's one thing I learned. You can't go woulda, coulda, shoulda. Hindsight's always 20/20, right? I've gotten some of my stocks stopped, right? And I would have made so much more money if it didn't get stopped out, or I would have, not lost as much if it. But that's my whole point. When you have a trading system, you have to have the discipline, because if you look at that example, how many times when does the stock go way below your stop loss amount? You could have lost way more, right? There's that risk. At the point in time you put the loss in, when the stops hit, when your stocks goes down, right? You don't know if it's coming back. No one knows. No one can predict the future, right? So like I said, from that viewpoint, it's a hindsight thing. Hindsight's always 20/20. You always know better when you look in the past because you know what the outcome's going to be. So the point being, and then to answer another question, what if the stock goes up, right? So when you put a stop loss, it's the max loss you want in the stock. When the stock starts moving up, you also have to have, in addition to a stop loss on that, is your minimum profit. You have to have a threshold on profit. You can't get greedy. Like you watch me at a blackjack table, right? There's a certain amount of chips that I make. I'm taking my money off. I'm leaving, right? Because it's a discipline thing, Well, the first thing I learned as an investment banker when I was a kid was one of my clients told me till today, I never forget. Take your profits, cut your losses. My client told me that when I was a kid, his account manager. He says that will get you wealthy in decades. Just do that. Take your profits, cut your losses. So that's where I get this mentality. So if you open a trade, you want to make sure that you know how much your capacity of loss is. That's the maximum. It could be 3%, could be 5%, could be 20%. I don't know. It depends on your trading system or your risk threshold, right? But obviously, if you make right decisions or the stock moves in the right way, it's going to start going up. You should have a minimum profit you want to take off the table when you hit that number. So in a nutshell, what I do is my stop losses follow. As the stock's going up, I follow it up. Because I don't want to keep it down here because I want to make sure I take some profits in case the stock dips, right? So I follow it. That's one way.
So as the stock's going up, you...
Not all the time, but yeah, there's some stocks where I feel, again, it's your trading methodology is how you trade, right? There are some positions I look at the price action, I feel it's going to keep going, right? But it's very volatile, so I don't want to put my stops too close as it's moving upwards because I don't want to get shaken out, they call it. I want to give it room. It's very volatile, but I believe for whatever my trading system tells me, it's going to keep climbing. I have a bigger, wider stop loss. Or in other situations where if I've made my profit threshold, for example, like I have a profit threshold. It depends on the position. It depends on the size, anywhere from 20%, 30%, 15%. I don't know. Depends, right? If I hit that threshold, I'm going to put my stop really close because you know what? I'm happy with this. I'm not greedy. I want to let it run, but without much room so that the minute it dips back, boom, I take my money off the table.
Okay, so I have another question. So say a stock tanks and your stop loss is hit and you sell the stock and the stock starts going back in. Going back up. Do you buy back in?
It depends on the stock and the price action. My one way of looking at things is when I get stopped out on the downside, I kind of just, okay, I'm out, right?
Because a lot of the comments I'm seeing are like, the stock will tank in a day and then come back up the next day.
Yeah, you say that right now, but there are times when in the bear market, guess what? It keeps tanking day after day, week after week, and you're screwed. You can say that now because we're not in a bear market right now. We're basically in a bull market. There are shakeouts, meaning it goes up, it kind of shakes out, it digests profit, keeps going up. Yeah, you can say that now, right? But my way of trading with my level of discipline is if I get shaken out and the stock turns later, I might go back in. I might. But there's so many other factors. You can't just say, do you go back in? Depends on the stock. Depends what the next earnings looks like. Depends on the price action. Depends on the volume. So I guess I open up a can of worms because a stop loss is one part of a strategy that you have. It's only one part. It's not all encompassing. It's part of many different things I do in stock picking. Yeah. So there's more questions come. I'll try and answer them.
Got it.